Hello everyone. This is the pre-market report video for today, 3rd July 2025 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's discuss what happened yesterday. Day before yesterday, Trump mentioned that trade deal with India is at closing stage, and on that expectation Nifty opened around 25,600 mark. But it seems investors are not buying, and I think they want the deal to be signed officially. And in addition, as we discussed in the last pre-market video, the trade deal before July 9th is unlikely for US with some of their key trading partners like Japan and probably with South Korea and as well as European Union. So yesterday Asian market closed mixed. Only Singapore and Hong Kong closed on the positive note. Others such as Japan, China and South Korea closed negative. In line with that, our Nifty also dropped below 25,400 mark but managed to climb little bit to 25,450 mark. Sector wise, because of the better profit margin expectation from some reputed analysts, metal stocks was up by 1.4%, consumer durables added 1%. On the other hand, banks, capital goods, realty, media, power down 0.4 to 1.4%. Especially HDFC Bank, which was down near 1.3%. Historically, HDFC Bank released their quarterly business update on the following month date 3rd to 5th. Now, because in this quarter, HDFC Bank share price already increased about 10%, so I think investors are profit booking before the business update. Or possibly some insiders might got forehand business update info, so they might be adjusting their position. Either way, I am expecting either today or tomorrow or during weekend HDFC Bank to release their Q1 FY 2026 business update. So please look out for that. Overall, the advanced return ratio was 6:9, meaning for every 6 stock increase in the broader market, 9 number of listed stocks declined yesterday. So we could say the whole broader market itself negative. Institution wise, in the cash market for the third day in a row, FI was net sellers. Yesterday they net sold for near 1,550 crore rupees and DI supported the market. They net bought for little above 3,000 crore rupees. And if you see the participant wise open interest in the options market, proprietary traders changed their stance from positive to neutral. At the end of Tuesday, they had net near 2% open interest on the bullish side. That yesterday they reduced it to just net 0.6%, very close to neutral stance. On the other hand, from net 1.1% open interest on the bullish side, retail traders increased their positivity to net 4.6% open interest on the bullish side. And in direct contrast, from net 2.5% open interest on the bearish side, FII increased their negativity to net 4.8% open interest on the same bearish side. Then regarding future index, if required, please pause and have a look. Overall, proprietary traders now turns neutral as they seem expecting the range bound closing. On the other hand, if Nifty moves higher, then retail traders will make more money, and Nifty moves down, then FII will make more money. So those were the quick takeaway from yesterday's Indian market. Before going to the next topic, I like to highlight one thing. In the Instagram, I found this fake account who is imitating as me. So please be cautious. There is no way I'm going to give any recommendation at all, and I don't know what their intention. Please don't believe on all those. I will not ask any money from anybody. Neither I won't give any financial advice at all. Anyway, coming to US, last night as a third country after UK and China, Trump reached the trade deal with Vietnam. And as per this new deal, US imposes 20% tariff on all Vietnam goods exports to US, and if Vietnam do any transshipment from China or other country, then that will attract 40% tariff. In contrast, for US goods imported into Vietnam from US, it will attract zero tariff, which is a huge positive for all the US based companies and positive for US stock market. However, on the negative side, after pandemic period, for the first time, the private number of new non-farm jobs added came as negative value, minus 33,000 against the expectation of 99,000 new job addition, which is a huge alarm, and it also shows the hesitancy among US companies for hiring new people provided having the tariff related economic uncertainty. So US stocks trimmed some of its gain, but still S&P 500 managed to scale up new all-time high closing. In the end, Dow Jones closed flat, S&P 500 was up by 0.47% and Nasdaq increased 0.94%. In case of VIX, it's still between 16.5 and 17. In line with that, early morning today, GIFT Nifty marginally increased and traded at 25,556. Equaling that with the spot market, it's indicating the flat to gap up opening of around 40 points. Then regarding Indian ADR, as it is only Wipro closed positive, all other major ADR and Reliance GDR all closed mild negative under 1%. So if you calculate the arbitrage means only Wipro indicating the flat difference, whereas others such as ICICI Bank, Infosys, HDFC Bank and Reliance GDR all indicating the positive arbitrage difference of around 0.5 to 1%. Then turning to oil, yesterday Iran suspended their cooperation with UN nuclear watchdog, and thus Middle East escalation increased the oil price by near 3%. At the time of this video, WTI crude trading near 67.5 US dollars per barrel and Brent crude is trading around 69 US dollars per barrel. As a summary, US market managed to close positive, and in line with that, GIFT Nifty and Indian ADR indicating the positive opening. However, this Vietnam trade deal is utterly bad for Vietnam, so this now raises the question for the Indian companies that what kind of deal India might get from US which could make the investors nervous. And also this negative job addition in US is bad for the global momentum. Moving on to stock open interest, KFin Tech, CG Power, NBCC, Marico and Godrej Properties were some of the 77 stocks that got an increase in open interest along with a negative close indicating the short build-up. On the other hand, Blue Star, IAFL, Nykaa, Amber Industries, Kalyan Jewellers and Inox Wind are some of the 62 stocks that got an increase in open interest with a positive price close, which means these stocks got the long build-up. About the things to look out, early in the morning before our market opening, Chinese service payment data is due. Then at 10:30 am, Indian service payment data is scheduled to release. In the afternoon, there is a schedule for various composite and service payment data for June month from Europe such as Germany, France and UK. In the aftermarket hours for US, their service payment data, government jobs data, unemployment rate and usual weekly jobs data are some of the items we need to keep an eye out today. Coming to technical, for the second day in a row, Nifty opened positive but continued to slide throughout the day and had some recovery in the end. Thus on the daily chart, Nifty formed a long bearish candle with minor lower shadow. Technically, this market action indicates a downward correction from the near formed resistance around 25,700 level. Hence, as long as Nifty trades below 25,700, we could expect the consolidation to continue with 25,300 to 25,200 zone as a support. And the decisive close below this support zone could push down the Nifty further down to 25,000 to 24,800 level. However, a move above 25,700 may open the path for 26,000 level. Then in case of Bank Nifty, after some session it followed a Nifty. It opened 110 points gap up but continued to slide and closed below 57,000 mark. Thus on the daily chart, Bank Nifty formed a long bearish candle which engulfed before 3 session candle. So Bank Nifty also joined Nifty and indicating the potential reversal. In addition, RSI indicator slipped below 60 mark. So going forward, 10-day exponential moving average around 56,800 is the immediate support. Any sustainable move below 56,800 level, we could expect the further correction to 56,400 level. Whereas on the upside, 57,200 to 57,300 zone is the immediate resistance. Regarding the weekly options data, the maximum call option open interest was at 26,000 strike followed by 25,600 and 25,500 with maximum new call option writing at 25,500 strike followed by 25,450 and 25,600. On the put side, the maximum open interest was at 25,000 strike, followed by 25,400 and 25,300, with maximum new put option rating at 25,000 strike, followed by 25,350 and 24,150. Thus, from options data, it's indicating strong resistance at 25,500 to 25,600 level and strong support at 25,300 to 25,200 level. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.